It's a new quarter. It's my birthday month. Summer is missing in action, but all we really care about, it's Friday. This is the week that was. With me, your host, Simon Brown. I'm joined by Vestact's bright Khumalo, Chantal Marx from FNB Wealth and Investments. Welcome both. Brian, I want to come back to China later. I know we talked it last week. We'll talk more about that in a bit. It's been a weird week, but in the sense of it, I don't know, markets are up again. I mean, it's almost like it's a bull market and stuff's going, as David says, bottom left, top right.
Exactly, but the one we like the most is the South African bull market because we haven't seen much action here in South Africa. So anything green or pushing us higher, we very much happy to welcome it, and we would like to see more of the same. And I'm talking not only, with the China news related stocks, which is, the Naspers and Prosus of the world, but, the commodity stocks, we like that. We like the story, even though we're not invested. I'm just saying for the greater good of retirement annuities out there. And obviously other companies that are finally catching a bid, in the small and mid-cap sector in South Africa. So I'm happy to see that. And obviously our currency, everything seems to be just coming together slowly.
I don't know, you mentioned the currency, Chantal. We spoke about it last week. Monday morning, 1704.
Yeah. Today is 1720 something.
54. But that's just the rand.
Dollar story. It's a dollar story now. Yeah.
Yes, and it is the rand. It is the way that the rand reacts to dollar strength. It's the way that the rand reacts to almost anything. It is quite a volatile currency. It's probably amongst the most volatile in the world.
Yeah.
So I think you need to pick your levels. If you are wanting to take money offshore, you need to pick your level and be committed to that level and not try to ride it down too much. And then obviously the opposite is true as well. If you want to bring money back, you have to pick your level and not worry too much about it weakening out further and you potentially gaining a little bit more. I will say it's a bit of a nightmare for importers and exporters at the moment. Probably the banks will do well to benefit from some of those hedges that might be put in place because of it.
Yeah, I cheat with the rand. I don't even pick levels.
Even with the spreads, just like exchanging money. You said, sending money offshore, bringing money, they're having a field day.
Yeah, well, fair enough. What about Brent? Is this just a response to the Middle East?
I wanted to speak about that in the intro, but I was like, maybe we're touching on a very sensitive subject here. Yeah, I mean, it had I think it was a day ago, its biggest one-day gain since a long time, 2017, I think, and then today we're back to like it never happened. So, it's a volatile commodity. I like the fact that, petrol is going down in South Africa, but I don't know how long that's going to last if the, Brent continues to be this volatile. But again, it's out of our hands. It's one of those things where, it's a third hand and a fourth hand, moving all of the markets, and, Iran coming into the party, for a lack of a better word, is moving oil in the wrong direction and making it more expensive. It's sad for us. It's great for the Saudis.
Yeah, and Sasol.
and
Sasol.
Hey, Derek Jensen from Rensburg picked Sasol on Stockwatch on Wednesday. I'm like, brave man, and look at it. It's up. Quick before we go, President says we can do 3.3%.
Yes, so I actually think that is something that is achievable if everything happens that they want to happen and everything works in our favor and we get some the global macroeconomic tailwinds, and it's if, and that's not to say that it is a zero probability or a small probability story. A lot of it is self-help. So I think it's absolutely achievable. We just need to continue on the path that we're continuing and hopefully continue to benefit from the stuff that we are benefiting from. I do not think a high oil price is going to help us achieve that. But that said, it's not something that I'm overly concerned about at the moment. There is a bit of a supply glut in oil, and Saudi isn't even firing on all cylinders in terms of their production. So I do think that there's scope to make up for any lost production if we do get the situation in Iran escalating further.
Also making news this week, another Steinhoff conviction as former CFO Ben Lachrange is sentenced to 10 years in jail. The US presidential VP debate was, horror of horrors, fact-checked. Former President Jimmy Carter turns 100. Zuck's wealth tops 200 billion. The Saudi oil minister says oil cheats will see $50 oil. Yes, please. US East Coast dock workers go on strike for a 77% pay increase. Please don't let our government workers hear that. Costco will start selling platinum coins as gold coins are their top online product. Capitec results Alps knock the lights out while the UK switches off their last coal-fired power station. It's a fat bear week, and our Justice Minister may have backdated that loan agreement. But first, let's start by going back to that Chinese stimulus package, which saw Chinese indices reverse over 3 years of losses in a single week. Here's Tian Pan from Prescient China.
The ultimate aim of the stimulus policies is to lift overall market confidence and lift sort of confidence on the consumption side. So what we've said for probably 2-3 years now is that the Chinese consumer does not lack money. They simply lack the confidence of spending. We've seen savings rates absolutely skyrocket. And the last week will hopefully, with the stimulus measures, give consumers and everyday Chinese person the confidence to spend a little bit more of that savings, which will then help grow the economy.
We sat here last week, we talked the China story, it hadn't even started. And that market, I have seen things go vertical, but not an equity market like that. And as Jen is saying there, it is about the confidence. It's actually a longer term story. This is playing out over years, and we kind of got it all in a week.
Yeah, and if you look at the kind of the movements that we've seen so far, we're not even getting close to levels where those stocks traded at in the past. No. Even from a valuation perspective, we're probably seeing some of the big tech shares in China still trading at half the PE values that they were trading at 3, 4, 5 years ago. So we are definitely seeing a bounce from what we hope is a bottom. But I think that this thing has legs if that multiplier impact of this fiscal intervention and the monetary policy intervention actually starts gaining a little bit of traction and isn't just a one-off and then it's bad confidence, poor property market, all of that stuff all over again.
You know, in the US, for fund managers, or maybe for hedge fund managers in particular, the two top trades, the first trades we all know about, it's the Magnificent Seven. Mm-hmm. So you long that, you're gonna, your kids are gonna eat. And then the second largest trade was actually to short US listed Chinese shares. So that trade is not unraveling yet, meaning this rally potentially still have some upside.
So they've got those are brave shorters.
So those guys, it's either they're unwinding the trade slowly, or they haven't learned their lesson from the carry trade in Japan.
There's going to be a short squeeze.
There's going to be a short squeeze, and
no fingers left.
It's going to be so good for Naspers and Brooks.
But it will, yes, and Richmond, we will absolutely take it.
So once I see those share prices moving, I'm going to start smiling a bit.
And there's another story to it as well. The recession US fears seem to have faded, but an idea of perhaps a US slowdown, maybe down to 1.5 or 2% global GDP. Well, hello China, they can pick up the slack.
Yeah, look, I think the Americans have termed it quite conveniently that this stimulus package, which the details are still in the process, because they're still having the golden week, everything is shut, so we don't know what's actually happening on the ground. They're calling it the bazooka stimulus because it's not like the little bullets that they were giving us in the past couple of months, but this is the real thing that's going to explode the economy. So we're looking forward to see what the actual details are of the stimulus and see how it's going to benefit, the average Chinese person, I guess the average South African as well.
Well, yeah. Hey, look, and if this all plays out, hello commodities, and then hello South Africa, and hello
jobs. Exactly. Yeah.
Just as everything is looking rosy locally, Eskom comes along and says, hold my candle, as they want a 36% increase in the price we pay for electricity.
With a 3.4% GDP growth, we of course then as a country and as an economy can be able to tackle the high levels of unemployment, the poverty levels, whereby people now have to decide between, do I buy electricity or do I buy food, notwithstanding that by the very high electricity tariffs that we have, the cost of food itself has become unaffordable. But also, not only will we be able to address the high levels of unemployment with a higher electricity consumption per capita, which results from lower tariffs, but at the same time, we will be competitive as an economy.
Yeah, I mean, Eskom is just broken. And I get why they want 36, but I get why we can't pay it.
Yeah, I think that that Eskom is really a concern for me still, and it's not because of load shedding, which was the case a year ago. I think when you see electricity price increases like this, it could lead to social unrest and revolt, which is very, very concerning and can derail our story, right? And then the second thing is, I'm concerned for Eskom because there are alternative options available now. Even if you're looking at middle and lower income households, you can rent a solar system. And at some point, it's going to be cheaper to rent a solar system than to pay your electricity bill at Eskom.
Currently it is.
Is it already cheaper?
Points it can be already.
Yep. It is at some points, yeah.
And you don't have to pay ridiculous administration fees to City Power either. So they're going to be in trouble because their demand isn't inelastic anymore. Their demand is going to become elastic if it hasn't already become more elastic. And at some point, if they raise prices, people are going to go elsewhere.
Isn't that Eskom's just over? Because that debt burden is why they need this money. I mean, Eskom is just toast.
Yeah, but then they keep, beating a dead horse here. I mean, I've been criticized before for talking about second order effects without answering the question directly. So I'm still going to do that because that's what I enjoy doing. Because, I mean, electricity is a need in South Africa. It's a basic need for that matter. And if people can't get it legally, they're going to seek alternatives. Wow. Some of them might be legal, some of them might be illegal. So it's a matter of affordability. The more you push them out in the economy, they'll find ways to bring themselves in. Yeah. So, and this is why we have a situation that we're seeing in most neighborhoods. I always make the example of Soweto, for non-payments and illegal connections. I mean, it's not just Soweto, it's everywhere in South Africa. So, and municipalities don't have the money to actually go around these households and disconnect them every day. Eventually, there's a breaking point for these guys because it's not their job to continue disconnecting these people, and some of them actually come from these neighborhoods. So there'll be remorse there for the people, and people are just gonna stay in those illegal disconnections, and the municipality are gonna keep raking in those debts that we've seen in the past, and no one is going to pay them. So it's
a death spiral.
It's bad. It's a debt spiral. It's a bad one. These are second order effects of what they're doing at the top without thinking.
If you can get solar, OpenAI, home of ChatGPT, has raised 6.6 billion at a valuation of 157 billion. This is an expected revenue of 3.6 billion and losses of 5 billion. I don't know, a lot of money. Bright, we've got half a minute before break. 157 doesn't seem extreme.
Yeah, but it is. It's twice the valuation they had before, which was, I think it's a year ago or a year and a half ago.
Year and a half.
Yeah, and it's now bigger than SpaceX. We all thought SpaceX was solving some problem, whatever, but these guys, it's just AI. I'm still trying to figure out exactly what problem they're trying to solve. And here's the kicker. So after Littlefinger has fired everyone in his own company, he's getting 7% for converting the company into a for-profit company. So Sam Altman is an interesting individual. He's going to be worth $11 billion overnight. It's crazy.
As I say, when you shoot for the king, don't miss. After the break, still not much happening on Sense. That gives us more time to marvel at the glory of Capitec and who's the best fat bear.